Welcome to the Market Mystics podcast, where we discuss what's happening in the cryptosphere and trading on earth as it is in heaven. Buckle up and huddle on while we dive in and get weird. Here are your hosts, Joshua and Kim.
Good afternoon, everybody. Kim, what's going on today?
Happy Thursday. Well, I'm so excited to talk about regulation today. It's like one of the most interesting topics out there. If anyone's ever studied law, you all know. But before we do that, let's get some market updates. So it looks like Bitcoin is down about 0.75% in the last 24 hours. However, it's up 1.3% over 7 days. Ethereum sitting at the same, down about 0.75% over the last day and down 1.9 over 7 day. That's interesting. Bitcoin's up 1.3, Ethereum's down 1.9. And then, we like to talk about kind of the biggest mover in the top 100. And this week, this day, it is Luna Classic or Lunk, which I don't like to call it. Of our deep love for Luna. It is up 18.9% in 24 hours. However, it's down 29.1% over 7 days, and even more than that if you kind of expand the reach of that look a little wider. I will tell you,
14 days, it's down 60%, 60.
Ouch, you guys, that one hurts. I will say the price of it is not, it has a decimal point and 4 zeros before it starts getting solid numbers. So that's where that is sitting. And if you recall, not that long ago, before it crashed in May, it was kind of hanging around $80, $90 a share. Yeah. And so now decimal point 0.0000 something is quite a difference.
Its all-time high was April 5th of 2022. It hit $119.18.
Ouch.
Yeah, that's...
I think they would still consider that 100% loss.
Yeah. Yep. Pretty crazy. And honestly, so this happens to be about Luna Classic, but even the new chain they built, which is just Luna, is also just getting devastated. And so it's a rough time for the Luna ecosystem.
This is true. I was looking through some articles last night, and the algorithm knows me and was giving me Luna stories. And boy, there's a lot of hate out there. It is getting like bleaker and bleaker in the news for Luna, and especially Do Kwon, the CEO. People are coming down on him hard.
Yeah.
It's not looking great. Although he still is saying that he plans to bring it back to its former glory. But I think that's where all the critics are coming in and going, haha, how could you possibly?
Well, there's a lot of mixed opinions going on right now about Luna and its future. And that's one of the things we want to talk about today is all of the kind of back and forth, up and down information that you'll find if you research anything. So Kim and I were talking a little bit before the show about some of the news around regulation of crypto. And so I just started looking for articles, and I found several pretty quickly that were positive and several pretty quickly that were negative. And it's just kind of that tends to be how crypto is right now. Like there are things about it that are positive, there's things about it that are negative, and we're sort of sitting in this kind of wobbly place where it could go either way.
That's so true. We're in an interesting time right now with crypto, because we've seen a pretty large adoption of crypto. So in 2020, when the pandemic happened, there was a big crash. It happened in regular markets and it happened in the crypto markets, but that was kind of when momentum started with crypto. So while the markets were down, a lot of people started dabbling. I think maybe it was a combination of like quarantine, being at home, the whole work from home, remote work, where people are extra productive, but also have extra time to search out things on the internet.
Mm-hmm.
Anyway, there was kind of this boom of interest and it just grew over the next year and a half. And the markets grew exponentially. It was really kind of this time of like a gold rush per se. And now it's been since January. We've just kind of been in a downturn and it's not been looking pretty, but you see that there are still people hopping on board just a bit more tentatively and a bit more like traditional investors than like gold rushers.
Yes, this is true.
Right. But as the market is down, it does present some really unique opportunities for us, for anybody who's interested in the crypto market, to kind of get back to those. It's not quite where it was in 2020 after that crash, but it's down enough. And we've seen some of the really big highs for, like, just look at Bitcoin, who in November hit over $60,000. Right now, it's still hovering around 30,000, give or take some. Like one day it may be 28 or 29, the next day it may be 31. I don't know, but it's somewhere around 30. But it gives us a really great opportunity, and especially with new investors, to research what is cryptocurrency, what is blockchain, what are these technologies, what are NFTs? Should I be getting into this? But we've had this kind of wide opportunity to be able to look into that and make some good decisions as to whether to get in or not.
Mm.
I will say I don't think the crypto market is going anywhere, not like up or down. I mean, away.
Right. Yeah.
I think it's here to stay. Um, we're just just like you said, it feels very shaky, like very wobbly right now.
Yeah, we're sort of in this no man's land where it feels like it could go either way. But like you said, that presents a lot of really great opportunities. So, a couple things you can do is while the market is going down, you can dollar cost average, which is essentially just buying little bits instead of buying your whole portfolio all at once. So you buy little bits now, you buy little bits when it goes down again. And as Kim said, like especially Bitcoin's been like hovering between 29,000 and 31,000. Well, maybe you just set up something to buy $50, $100 every time it hits 29,000, and you're just sort of inching your way into positions at a lower rate. And maybe it goes down to 28 one day, but it's still, you're still getting in lower and lower, and it may not be perfect. Like, the ideal world would be to buy the absolute bottom, but that's so hard to do that dollar cost averaging is a really great way to increase your portfolio in a more stable manner, I guess is a good way.
Maybe palatable too. Like, it feels a bit more palatable to put in $50 or $100 regularly than it does to just dump in
1,000 at once.
$1,000 or $10,000 based on where your portfolio is right now. It's almost bite-sized. It made me think of, I don't know if I'm sure they don't use this in trading lingo, but in the poker world, they would call that limping in. Like, you just kind of get in, you're still in it, but you're just kind of going at the minimum. But it's a bit lower risk and can be easier to take those small bites.
Yeah, for sure. One of the other things you can do is there's many opportunities to stake coins. There are certain platforms that will give you interest for holding coins. You've heard both of us talk about crypto.com before. They have a pretty robust staking and interest side of their platform. And that's that can be a great way, while the market's not really moving much, to just sort of get a little bit of passive income, get a little bit of money coming your way, even if the coin is going down a little bit. I've staked several coins that have gone down, and I was going to hold them anyways. And so if I'm holding them, I might as well be earning a little bit of interest in them. And so that's another really simple thing you can do if you have a buy and hold strategy and the market is a bit on the downward side of things.
Absolutely. And with that, I will say I just received an email maybe 2 days ago that Binance US just opened up staking in their platform, which for those of you in America, that is the only Binance available to you.
Right.
I know Binance.com, the big Binance, has had staking for a long time, but Binance US just released that fairly recently. But also, if you're on a platform and you don't have the ability to stake a coin that you want to, you might also go do some research on the coin's actual page. And a lot of those coins, if they're proof of stake, a lot of those coins will let you stake through their website. So you may have to transfer your coins to an external wallet and then link it to that. But if you're really wanting to stake stuff, that's a good option too.
Yeah. And you mentioned something that we're always very fond of saying, but do your own research. And that's one of the best things you could do during a down market, because when the market is really booming, really just skyrocketing, it's so easy to make money because almost everything is going up. And so it's hard to really invest in something that's crap when the whole market is skyrocketing. But it's harder to do that when the market's going down. But what you can do is you can spend that time doing research. You can look at, like Kim said, different coins and what options they have directly through them. You can look at new coins that are being launched and learn about their platform, read their white papers, find out what are they doing that's different, what are they doing that's better. And one of the things you can do is, while you're doing that research, you can be making moves and investing in some of these coins that you believe that when things start to move will be good investments. Because now's the time, a bear market is the time that you want to be buying your longer term coins, because that's when they're on sale.
And you know what? This is also a great opportunity, because you have kind of a time to be able to do your own research and learn about coins that you want to get in, instead of in a bull market where you might be just chasing a big mover.
Yeah.
And it might actually be rooted in FOMO. If you take this time in the bear market to do your own research, you might find some coins that you are actively, legitimately behind, and you believe in them, which will make a more solid investment in the long run, because you'll actually believe in them. And so if something goes up and down, you're not going to be tempted by FOMO or by panic selling. You know what I mean? Because you didn't get in over emotions. You're not going to be getting out over emotions, but you're going to have something that you actually believe in. And that makes it a lot easier to withstand some of the big moves.
Yeah, it definitely. And we've talked about that before, but it definitely makes a difference when you believe in a project rather than you believe in the next 24 hours. And I'm not saying you can't make money in a coin that's skyrocketing, in a short period of time, but you're going to invest in that. You're going to behave around that coin much differently than you do a coin that you truly believe in.
It's true. And if you get into the research end of it, Maybe you'll find the next up and coming coin and you get in on the front end when it is worth a fraction of a cent. And then you get to take the ride when it goes and skyrockets, as opposed to trying to get in really quickly while it's doing it and all of the blockchain is clogged.
Right.
You know?
The other thing you can really pay a lot of attention to is regulation. Like we talked about earlier, regulation's kind of going one way or another, but spend this time following what's going on in the politics of cryptocurrency. And because if you're ahead of the game, then you can sort of see patterns. I mean, that's the whole like goal of trading. I would argue sort of the goal of life is to learn patterns of when things are moving, how things are moving, so that you can participate in those moves.
Mm-hmm. Mm-hmm. It's good.
All right. Well, that may be all we've got for you guys today, but we will see you next Monday for another Mystic Monday. And I hope you all enjoy the weekend.
Have a good one.
Thank you for listening. Join us every Monday and Thursday as we discuss trading on earth as it is in heaven. If you want to connect further, follow us on social media at market.mystics for Instagram and TikTok, and search for Market Mystics on YouTube and Facebook. If you still need more, follow the link on Facebook to book a coaching appointment. Until next time, see ya.